Welcome to the TEK2day podcast powered by CEO Radar. It's your host, John Mayetta, episode 367. Re-recording this due to technical difficulties. If it's not one thing, it's another thing. Life as an entrepreneur. TEK2day, we published an article overnight entitled Binging on Buybacks at Innovation's Expense. Short-term greed has gripped some of the world's largest technology companies. A number of CEOs and boards are guilty of trading long-term innovation and customer value for short-term share price support. Innovative companies, and we provide examples of some in the article, have bucked the buyback trend. And we talk about how corporate debt levels is at record high. Most recent data I captured for the article was Q3 2019, 16 trillion in non-financial corporate debt outstanding. And my beef with the corporate debt is that companies are using it to, they're using record high levels of near zero interest rate debt to execute share buybacks. And I especially have a problem with it when we're talking about technology companies, because the technology industry is so fluid, change is so rapid, leadership positions are so tenuous. You ought to be investing all of your capital in innovation, whether it's organic R&D, or if you listen to this podcast, I'm a big fan of strategic M&A. You really ought to be doing both. But to play banker or private equity firm, less so private equity, more Wall Street trader, right? I mean, you're trading currency, you're trading stocks, and you're trading, you're not investing when you're buying back shares. And maybe I should write a separate article around buyback effectiveness, because what history shows us is that companies are terrible at it. They typically buy at high points, don't buy at low points. The biggest offender, and we provide detail on 10 of the largest technology companies, but the biggest offender is Oracle. In the past 2 fiscal years alone, Oracle has repurchased approximately $49 billion worth of their own stock and have only invested a paltry $12 billion in R&D. And you wonder why Oracle is a technology laggard. If you look at them over the course of time, and we have a PDF article, or rather 3 PDF tables that are embedded as a link in the article. And if you click on the link, we've got the 10 companies, and then we filter that universe down and we show it 2 other ways. So we have 3 tables in total, in addition to the 2 graphs in the article. So we give you 5 graphs, all for free. So if you look at Oracle from the 2010 through 2019 period, they have executed $98.4 billion worth of share buyback. So just think of what they could have potentially acquired as an example. I mean, if they set aside a portion of that buyback activity, Salesforce probably would have been out of reach, because if you look at the table that I'm talking about, you'll see that Oracle's share buyback activity has really accelerated in recent years, and by then, Salesforce was quite sizable from a market cap standpoint. Just to give you a flavor, Oracle, over the past 2 fiscal years, as I mentioned, almost $49 billion in share buyback activity. And if you look at the past 5 years, where are they? $70 billion in share buyback activity for Oracle. So just an enormous number. And then, as I said, if you look at, and I won't tell you which companies, but if you look at the companies that we have here on the first table that don't have a share repurchase program or have executed very little, particularly years ago, and haven't really done any since interest rates moved to near zero levels post the 08-09 downturn. If you look at those companies that don't really have a share buyback program, my guess is one of the first adjectives that will pop into your head as to how you would potentially describe those companies would be innovative. So it plays out. I haven't proved it mathematically. I don't have a statistical proof. But the companies on this list that don't have a share buyback program, I would argue in recent years, have been highly innovative. And in my mind, there is a correlation between large share buyback programs versus no share buyback program. And depending on which of those paths you choose as a company, it has a direct impact on your level of innovation. So take a look at that. I couldn't feel more strongly about technology companies using their capital to drive innovation and to drive customer value. I think the share buyback activity that we've seen since the 08-09 downturn has been one of corporate America's largest sins, particularly within the technology industry. And there's one chart that we have in the article. It's the second chart. You don't have to click on the PDF tables to find this one. But it's entitled R&D versus Buybacks. And we plot it in chart form for 6 of the 10 companies where buyback activity is robust. And we chart dollars spent on buybacks for those 6 companies in the aggregate versus dollars invested in R&D. And you could just see how, back in 2010, R&D was actually larger in terms of total dollar amount. R&D investment was larger than buybacks back in 2010. And that has since flipped. And not only has it flipped, but the growth rate in buybacks versus R&D. I mean, it's a hockey stick when you look at this thing. It's disgusting. But that's all for now. See you next time.